Tesla earnings, January 25th. It seems it's going to be a big event on YouTube and Twitter in the financial world. Look, Tesla's at 140. It's rallied 40% up from 100 or 102 on its lows. Here's my very specific question to you. Do you think the numbers on earnings, given all the details we know about deliveries, productions, margins, etc., are going to be good? And as a result of if they are good or bad, how comfortable do you feel buying it before earnings and doing an earnings play?
Okay, so I never do earnings plays. I don't try to time that kind of stuff. And having said that, it's because I already am in the stock. So a lot of positions that I want, I'm already in. So I am in Tesla. I'm not trying to rush in and buy a lot more Tesla. Having said that, there's no point to try to play this earnings. If it shoots off to the moon, then that's what happens, and you can't be in every trade. That's unfortunate. So I would say people should try to avoid that, because what happens if it does tank and it goes back to 100? You're just going to be kicking yourself in the butt, right? So it might be better. It might be better if you just dollar cost average whenever you feel it is undervalued. And I would say if you just look at that and forget about earnings for a second, at $140, Tesla worth $350 billion.
They might do 100 billion in revenue next year or this year, 2023.
I don't play the earnings thing because I just dollar cost average on quality companies, meaning when I think they're fair valued or undervalued, even if they're fair valued, by the way. So Tesla, is it super cheap at, I don't know, what is it, around 25 to 30 PE? Yep. I would say it seems a little cheap considering if you believe the story that they're growing at 35% plus. And right now it's 40%. But as long as they keep it over 30%, I go by the Peter Lynch model where if the growth is 30%, the PE's all right at 30, basically. So I think we are okay to pay a Tesla at 30 PE right now, especially considering they're growing and we expect their earnings basically to almost double. Is that what we're looking at for next year, for 2023?
Yeah. I mean, if not 40%, if not double, right? Year-over-year growth.
Well, let's say
or the EPS potentially double. Right. Yes.
So that's
the most biggest of bulls are predicting a $6 EPS, more bearish $4. But even if it's a $4 to $5 EPS, if their margins shrink, it's not a bad, earnings per share to get for something on Tesla.
And who's the competition? Let me ask you.
Yeah, I mean, it's so interesting. Don't you think it was so weird, the narrative? Like 2 weeks ago was that competition is coming and this, and then Tesla jumps their price or crashes their prices. And now it seems like, well, how is anyone going to compete? Because there's no sensible consumer that would buy a Toyota over a Tesla when they cost the same thing. Now that the prices are down.
Absolutely. And I think somebody did an interesting article about comparing or was it a video comparing a RAV4 cost to a Tesla Model Y cost. And if you amortize it over, and obviously the savings in gas versus electric and all the maintenance savings, no, what is it called? No oil changes, no timing belts, none of this stuff. If you do that, basically the Model Y ends up being like $1,000 more over 5 years than some RAV4. It's like a no-brainer if you actually do the math.
So are there any numbers at all that you think are going to surprise in earnings that would cause the stock to tank? Margins, anything like that? Or
I still think that we have a problem in terms of that we were expecting 50%. So I think the narrative we might be pumping right now, I do expect the brakes to pump a little bit. So if I'm to make a guess, I would say don't be buying earnings. But then again, you still should dollar cost average into quality companies. When I say don't buy earnings, meaning you're either buying it because you want to and you want a dollar cost average and you're okay buying it lower and you're okay buying it higher. That's what I mean. But if you're just playing earnings, I think that's very risky. I would not do that.
Yeah. I was buying the dip at 178, 158, 130. And then when it got to 110, 102, then you start thinking like, all right, man, is this going to go to 80, 70? Like, and I feel like it's that mentality as a growth investor or someone that's just investing in companies that are going to change the world. You don't get all the companies right, but if you get a company like Tesla, you just keep going. You just keep buying. And I messed up on that many, many times. This is not my first time I messed up on it.
I want to ask you a question about this. So this is very important that let's say it does go to 80 and you bought it at 140, 150, 100, and then you bought it at 80. Then where's it going to go to zero? Like when at some point it stops, you understand, right?
Right. And I think that's been the hardest thing for me to understand, because when the sky's falling, you think the sky's falling. And then you realize, wait a second, no, where else are institutional money managers going to put their in bonds? Like, no, they're going to pick quality companies at the end of the day and they're going to save the stock.
And I want to make this clear. I'm only saying this for companies that are actually profitable. Let me make
Yeah.
this very clear. I'm not talking about all of the
Don't
junk,
say it. Don't say it.
all of the Palantirs in the world.
Don't say
We just lost half the audience.
That's not the funniest.
All the SoFis, even the Enovix. I'm investing now in a spec play Enovix, right? So I put some money into that. But honestly, I that can half tomorrow and I wouldn't be surprised. Like I wouldn't be shocked. If Tesla halves tomorrow, that's kind of shocking that it would go from
Yeah.
like a 25 to a 12 PE. That's kind of shocking considering we know they're growing 35% and they're actually super profitable, just printing money and all the
Yeah.
businesses that are coming. So I don't get worried about companies like this. I just don't worry about it. I just dollar cost average. I never go all in unless it's some stupid valuation. And honestly, even at 100, at a 20, 25, it wasn't stupid. Do you know what I'm saying?
Right.
Like
Right.
if it went to meta stupid, like a 10, that's stupid.
Right.
And then I would
Right.
probably go all in. That would make sense. But you always have to keep money on the side. It's very bad form to not keep some money on the side for that what if scenario.
Right.